Rajan Shah, Chief Investment Officer of Angel Broking, joins us as well with his views on the market. Rajan, it's good to have you on the show. What's the call that you're taking on the market right now? I mean, it's clearly trending downwards, but how much more do you think?
Well, Tanvir, actually, if you see Q4 numbers have been very disappointing in case of many companies. That is one thing. Secondly, if you see, I've been interacting with a number of managements from the engineering industry, from the infra industry, and interaction clearly tells me that there is a significant slowdown over there. And if you see, news which is emanating from the global, economy, I think that is also very depressing. So in this kind of scenario, we don't expect the markets to move anywhere. In fact, I do expect the markets to slip below 16,000. That has been our call. The last time also I was on your show, I had very clearly mentioned that we are headed towards levels below 16. Even after we go down to levels below 16, I think the markets are going to be in a range, a small range, and I think that is going to be the trend at least for the next 3 months, till something really positive comes up from the government on the reforms front, or something really, which could really trigger the market to move up. Otherwise, the markets are going to be lacking luster actually for the next 3 months at least.
And why do you think things will improve after 3 months? What will change locally or globally?
No, Nikunj, I didn't say that the things will change after 3 months. What I'm saying is that unless until some action is taken by the government, the markets are going to remain in this range, at least for the foreseeable future, And if no actions are taken by the government, I don't expect the markets to move anywhere. So I'm not saying that the markets will head higher after 3 months. What I'm saying is that what all is happening right now may force the government to take some steps, because the government is looking at divesting stakes in many of its PSU companies, And if it really wants to divest stakes, it will have to keep the markets buoyant. And to keep the markets buoyant, they need to cheer it up with some good news. So I don't know what that good news is going to be, but they will have to act.
Well, Rajan, you're forgetting that Government of India also has LIC. I mean, all of us thought that markets would be looking strong ahead of ONGC disinvestment, but as long as there is LIC, that white knight, they don't need to worry about disinvestment proceeds.
Yeah, that is there, but this time they are looking at, divesting many stakes in many of the companies, So probably for how long LIC is able to save the face, that, is anybody's guess actually. So I think they will have to do something to cheer up the markets, Otherwise, it's going to be LIC which is going to be a majority holder in many of these companies, And just like government, which is a majority holder in many of these companies right now. So it's just moving from government to LIC, that's it.
What do you expect to hear from L&T today? When they started the year FY12, their order book guidance was that they will grow at about 15%. They slashed it down to 5%. Do you think for FY13 they are unlikely to share a guidance?
Well, I think that, this scenario continues to be very challenging actually, and in this kind of challenging scenario, I don't expect any kind of, bettering of guidance actually, from the management. So I think it's going to be just normal, result declaration and hardly any major guidance, uptick actually. So I think it's going to be just lackluster, that's it.
Out of the earnings that you've seen so far, any conviction calls coming in, Rajan?
Well, Tanvir, a number of companies have disappointed, but at the same time, many companies have also surprised on the upside actually. And many of these companies are basically from the mid and the small cap space, So companies like Finolex Cable has actually surprised. Everest Industries also surprised. So there are certain companies which have surprised, and valuations are looking very compelling actually. So while the markets may drift lower and probably could be in a range of maybe 15,500, 16,000 for the next 3 months or so, I believe that there are certain companies which will continue to do reasonably well. Like just to give an example, last year itself, in the month of May, I was on your channel and Nikunj had asked me about some of my top picks, and the Sensex was 18,500 and I had recommended Godrej Industries. Now if you see, Sensex then was 18,500, today we are at 16,500, so the markets are down almost 11-12%. But Godrej Industries then was 185, today it's 242. So it's moved up almost about 25 to 30%, you know. So while the markets continue to be very challenging, there are certain stocks which are going to outperform, you know. So that is where one needs to focus at, you know. So there are a host of mid-caps which can actually surprise you by moving upward in a falling market, you know. So that is what the call needs to be.
Do you think in the near term banks will underperform?
Well, Nikunj, no doubt that PSU banking, stocks have come down to very compelling levels. You know, a company like SBI, number one bank actually, has come down from 3,500 to 1,800. So certainly, all of them are looking very compelling, But, we don't own any stocks of bank in our PMS actually, in our fund actually. But, we are extremely bullish on business which is related to banking, and that is insurance actually. Insurance, Nikunj, I believe is at the same place where mobile telephony business was about 10 years back, The market is huge, the potential is huge, the opportunity is great, and, these companies are going to do excellent. So, we continue to like Aditya Birla Nuvo, Max India, and Bajaj Finserv, We own Aditya Birla Nuvo in our PMS, We see a tremendous growth opportunity in this business, and I think all these companies are now all set to grow exponentially in this business. So, my bet, rather than banking, bet on insurance, because that is where the big money lies.
Why do you think, Rajan, consumer stocks are outperforming? Lack of options, or the numbers what they've reported for last 2 or 3 quarters, they've been strong, and given that they have commodity stocks have cracked and the fact that consumer companies have pricing power, there is every reason to believe that consumer names will still continue to outperform.
Well, you have rightly said, Nikunj. I think, firstly, they have been consistently performing, well, quarter on every quarter. So that we are seeing in Hindustan Lever, ITC, Godrej Consumer, all these companies are consistently performing, And at the same time, the other companies in the infra space, engineering space, they are actually consistently not performing. So I think because of lack of options in the market, plus normally these companies do well in this kind of scenario, when there is a lot of uncertainty and money flocks towards this kind of defensive ideas, So these companies have done pretty well actually. And going forward also, we believe that companies like ITC and Godrej Consumer, actually Lever seems to be fairly priced at 30 kind of P multiple. But if you see Godrej Consumer, I think this year it should report about 28, 29 rupees kind of earnings, So I think it's trading at less than 20 times, So I think Godrej Consumer should do well, and also ITC should continue to do well, So these two companies we continue to like in the consumer durable space. But there are certain pockets, Nikunj, in this consumer space which are actually excessively valued or irrationally overpriced. Like if you see Colgate, it's trading at 5 times the sales. If you see Nestle, it's trading at 5 times the sales. If you see Jubilant, it's trading at 5 times the sales. No doubt the opportunity in case of Jubilant is very high actually, the growth opportunity. But 5 times the sales looks to be on a richer side, So, my call would be in this space, avoid the stocks, get into Tata Global. You're getting at 1 time the sales. And Tata Global, we all know, has tied up with Starbucks, has also tied up with PepsiCo for launching Nourishco company, which is going to launch health drinks. So I think Tata Global at 1 time the sales certainly looks more promising than this companies which are at 5 times the sales,
Tata Global also is a tea company, and tea companies rarely have traded at such a discount, because at the end of the day, tea is a product which lacks pricing power. Tea is a commodity, it is not a finished product.
Well, Nikunj, we know that Tata Global has tied up with Starbucks and with Pepsi also. And internationally, if you see Starbucks is a $12 billion company trading at a market cap of $42 billion. That's 3.5 times the sales. If you see Pepsi, Pepsi is a $66 billion company trading at $105 billion market cap. So 1.5 times the sales. And Coca-Cola, what does it make? Sugared water. I mean, $46 billion of turnover and $164 billion of market cap. More than 3.5 times the sales. So if these companies can trade at this kind of multiples, why not Tata Global, which is now on the verge of exponential growth? At the conference call of Tata Global, the management of Tata Global are talking about a turnover of 5 billion. Currently, the turnover of Tata Global is $1.5 billion. They're talking about 5 billion by 2016. That's a 400% rise in about 4 years from now. If this is the kind of growth Tata Global is going to see, I don't see any reason why stock should be at this kind of levels. I think this stock is headed for a different zone altogether. Though my friend Ashwini Gujral has given a sell call on it with a target of 96, but I think in the next 3-4 years it's going to be a multi-bagger stock.
Yeah, I was just about to highlight that there's a short strategy coming in from Ashwini on that target of 96 and a stop loss of 113 there. Yeah. Well, the fundamentals and technicals really go in tandem, so I think we can make the exception out there. But Rajan, come to you on technology right now, and how are you allocating yourself, especially among the key technology stocks, Infosys, HCL Tech, TCS, and Wipro?
Infosys has come down to reasonable levels, at about 15 times. Certainly Infosys looks reasonable. But in the IT space, one stock which we have been liking a lot, and over the past almost 9 months we have been accumulating, is Geometric Software. Company has done reasonably well for the last year, and for the current year we are expecting about 10.5, 11 rupees kind of earnings. Stock is trading at about 62, 63 levels, so it's at 5.5, 6 times the earning. It's a Godrej Group company, and I strongly believe that Godrej Group may exit this business. They own about 32% stake in this company, and I think over the next 12, 24 months probably we could see they moving out of this business. And if that happens, this stock at 6p multiple looks extremely cheap. It's quoting at half the market cap. You see other IT companies are trading at 3-4 times the sales, whereas this company is trading at half the sales actually, not market cap, sorry. It's trading at half the sales actually. So I think as and when this company is sold out, the valuations could really get re-rated, So at 62, 63, there's nothing to lose in Geometric Software, It's a quality company from a quality management, and that too at 6p multiple. I don't know why this stock is being not looked at in the market.
So I have a simple follow-up question. Let's nail it down to your top large cap idea, mid cap idea, and then small cap idea.
Well, Nikunj, small cap idea would be Mahindra Eugene actually. Mahindra Eugene is trading at a market cap of about 170 crores, and recently, Mahindra Eugene is basically into two businesses. One is into alloy steel and one is into stamping. Stamping is doing extraordinarily well, and alloy steel is into losses actually. So recently they hived off 51% stake in they hived off the alloy steel business into a 100% subsidiary, and in turn hived off 51% of its stake in that subsidiary to Mitsui Corporation and Sanyo Steel Japan, for about 197 crores, So valuing its own stake at about 200 crores, whereas the market cap is 170 crores. So you're getting the stamping business absolutely free. So I think this stock at about 52 levels, Mahindra Eugene, should do exceptionally well. There was a time when this company used to report 52 crore of net profit. I'm talking about 2006, 7 and 8. If it reports that kind of numbers in the next 2 years, the stock would be at 150 rupees, Mid-cap idea would be, I mentioned Tata Global, and large cap would be Reliance. I think everybody is pessimistic on Reliance, and I think they already bought about 1.25 crore shares at an aggregate price of about 735 from the market. And with everybody negative on Reliance, I think it's time to... I have never been bullish on Reliance for so many years actually, but I think now that the company's management is buying its own shares, that too at 735, it gives me a lot of confidence. Secondly, it's sitting at 70,000 crore cash. So with global crisis looming large actually, it can aggressively buy international assets at very good prices, So I think Reliance is one stock I would look at, not from a 1 year time frame, but certainly from a 24 to 36 month kind of time frame.